What about the concern that it might be a real hard landing, not this mild recession that people are kind of bandying around, but something that actually is going to be quite destructive? Is there a growing risk we might see that if the Fed follows through with the current, mandated amount of tightening they've got priced in?
Yes, David. We deal in probabilities, don't we, David, in the financial markets? At the end of the day, I'm afraid I'm personally of the view, and I think the market is now increasingly of the view, that we're going to head towards some kind of recession. For the moment, the market's kind of talking about a mild recession. I'm afraid it could be actually a little bit more, it could be more severe than that. I mean, mortgage rates in the United States, David, were just about 3% in the United States at the end of last year. They're now 6%. That's absolutely staggering. We also have a global energy emergency, and we have a global food emergency, and we all know it's happening with the Russian invasion of Ukraine. So these things happen in history. These events that are so difficult to predict in terms of the geopolitical dynamic to it. But so we've got this really unfortunate cocktail confluence of forces here. So I'm afraid the housing market in the United States is unambiguously rolling over. Combine that with this remarkable tightening in monetary policy. And it's not just interest rates, as you know, David. I mean, here's a central bank in the United States that has had, pretty much both feet on the monetary accelerator, telling us that everything was under control, trust us, we've got this, inflation's no problem. They've suddenly slammed both feet onto the brake and then actually applied the handbrake simultaneously with quantitative tightening. We've never seen tightening of this magnitude. And so clearly what we're witnessing now is the deflation of arguably the biggest asset bubble the world has ever seen in equities, bonds, and now, unfortunately, housing. Housing is the one that's really going to get a bit messy here in Australia, but also in the United States. So we've got this triple whammy. We know that the equity markets are now in a bear market. We need to think about that. We need to navigate the reality. How do you trade a bear market? Bonds are in a screaming bear market, and now housing looks like it's going in the same direction. So I see you just put up on the screen that chart, which is just mind-boggling. We're witnessing the largest destruction in wealth ever seen in modern history. And so that's the world we live in right now. So we've really got to be adaptive. We've got to be flexible. We've got to be very, very open-minded here. And again, as you know, Dave, one of my favorite expressions, when the facts change, I change my mind. What do you do? Well, the facts have changed. And I think fund managers that I'm speaking to are still in a state of shock as to the kind of amazing change that's been around them. It's such a shame that they believe the central banks were going to navigate through this, as they kept telling us last year. I'm afraid the reality is the perfect reverse of that.